What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Wednesday out there. Hope you guys are all doing well. Going to go through a Wednesday live stream, a little bit miscellaneous. I'm going to cover a few things I've written in the last couple days, talk about Mark Cuban and what he said on Twitter, and take a look at the price charts and things of that nature. So thanks for being here. Let's jump right into it. Share my screen. Bitcoinandmarkets.com is the website. Check it out. You can sign up for a free subscription. It just gets all my free content that comes out, a weekly newsletter. Plus, I'm going to be starting to do these macro minutes. We're going to be reading through this. Let me just bring this up. Very short. This one is only like 200 words. So, I mean, it's very short. Just to get one idea across that you guys might be interested in. So, today's is gold's breakout hints at Bitcoin's next move. So gold has gone through a multi-year Wyckoff accumulation, and we're going to apply that to Bitcoin's multi-month accumulation. So here we go. Gold bugs finally get some Bitcoin-esque price action. It broke to new all-time highs earlier in the year and is extending the move, approaching $2,500 an ounce. So here is this chart. You can see it broke out back here in 2019, rallied, had a little blip with COVID crash, but rallied, continued to rally to new all-time highs. Then it was consolidating for a very long time. So if you think about this in Bitcoin terms, right? Think of this as the 2021 high over here on the left. We had our bear market, and then we broke out, barely touched a new all-time high, then consolidated for a long time, and then finally broke out higher. So you can kind of compare this multi-year pattern to Bitcoin's like last cycle, 4-year cycle. I mean, this is going back for 12 years or so. This is compared to Bitcoin's last 4 years. But okay, let's go on. Gold is Bitcoin's cousin. Its monetary characteristics cause a similar performance in the current macro environment. So the macro environment that we are dealing with is the end of a multi-decade credit bubble. And Bitcoin and gold are going to act similar in that environment. Of course, Bitcoin is also monetizing while gold is demonetizing. And so they're going to have slightly different performances, but it's going to be similar. That is why my 2024 forecast, I predicted gold and Bitcoin would have fantastic years, with Bitcoin outperforming, of course. Specifically, those characteristics are that Bitcoin and gold are assets that do not rely on proper functioning of the underlying financial system for their value. Indeed, they benefit from a malfunctioning financial system. As we head into recession, these safe havens will catch a bid. Okay, and now here is the big chart that I wanted to go over. So Wyckoff accumulation up here in this, let me make this bigger for guys on Telegram. Sorry, guys. Wyckoff accumulation right here. This is actually a reaccumulation. What you would see like a bull flag. See how it's coming from below, coming up. It's like a bull flag, long time bull flag. There's a final dip, and then it goes up. I've shown this on the streams before, but it maps out perfectly here to gold's multi-year reaccumulation after it hit its a new all-time high in 2020, reaccumulated, had this crazy sell-off. I thought it could go a little bit lower than this. I think I was what was I predicting, about 1,500, and it only got to about 1,650. So, but anyway, it rallied back, and now it's taking off. So if we apply this to Bitcoin, you can see this is the most recent accumulation just since March. The March 4th high is right here that I've talked about for a long time. And is that my cursor not showing up? Stand by. Okay, now there we go. Here is the March 4th high, and we've been accumulating in a reaccumulation since then, very similar to gold back here, and we've dropped down, and it looks like we're going to take off here. So what I did was I just took this last part of the gold breakout and pasted it onto the end here of Bitcoin, and what we get is about 90,000 by the middle of September. So I think that is very, very doable, totally within the realm of possibility. I would say that's highly likely that we have something appearing this type of breakout. Better than 50-50 chance. Since 2020, gold has completed a textbook Wyckoff accumulation. It consolidated after a good performance in 2019 through 2020, importantly hitting the spring phase at the end of 2023. We see the very same pattern in the Bitcoin chart, however, on a much accelerated timeline. Bitcoin began its reaccumulation in March, all right, and hit the spring phase on the first week of July. If we condense the breakout pattern in gold, because this is a weekly chart and multi-years, where this is a daily chart over here for Bitcoin, and it's multiple months, so we have to condense it and attach it to the Bitcoin chart, we get the result of the right pane above. If Bitcoin follows the pattern from its cousin, we will be approaching 90,000 by the end of September. So that is my macro minute for today. I thought this was a very interesting correlation between long-term gold pattern and short-term Bitcoin pattern. We'll see if that plays out. Okay, what else did I want to take a look at? Let's take a look at the stuff that I put out yesterday for Bitcoin Magazine Pro. This is the next chapter. I do not know at this time if I'm going to continue to write for them because they have made a transition. Let me show that page. Where did I have it pulled up? I don't know. I'll just open it again. So Bitcoin Magazine Pro, this is not a secret anymore because this website is live. Bitcoin Magazine Pro has been rebranded here from the Substack to a full-out website. So all they did was they got into a deal with Look Into Bitcoin, and they are doing all those charts. You can see they have all the stuff that Look Into Bitcoin had, and they have a membership that is the same price as the BM Pro Substack membership. But if you guys are looking for my content, it's not going to be on bmpro.substack.com anymore. It's going to be just over here on bitcoinandmarkets.com. So I'd appreciate it if you're subbed over there. If you come over, give a sub to this website. Okay, next chapter, successful macro insights and Bitcoin adaptations. For my last post, what I wanted to do was really detail out, or at least give an idea of my macro thesis, what I've been right on over the last couple of years, some major things I've been right on, and then talk about Bitcoin. So longtime readers of this newsletter will know that my take on Bitcoin and macro is different from the mainstream consensus, even within the Bitcoin space. I've had to stand my ground on certain calls that have proven right with the passage of time. I'm in the deflation camp and see Bitcoin adoption as the natural result of the deteriorating functionality of the credit-based dollar system. For years, I was the sole voice in Bitcoin talking about a strong dollar. And if you guys have been following me for years, you'll know that it has been an uphill grind. And I just watched George Gammon's newest live stream, I think from this morning, and he's having pushback on it now too, even though he's starting to sound like me and Jeff Schneider and stuff. He's getting pushback, and it might hurt his subs because people don't want to be challenged. They don't want their assumptions challenged. It actually is like off-putting, right? If you go up to somebody and you say, hey, all your assumptions are wrong, or at least all your assumptions are slightly wrong, and you need to look at it in this way, that's turns a lot of people off. And so anyway, I've been having to struggle through that to push the truth, what I think is the truth of the financial system and how Bitcoin fits into that. So yeah, for years I was a sole, before the term dollar wrecking ball even was coined, I was talking about strong dollar. Of course, that was unpopular and caused me to flesh out my theories in podcast and blog form and stick to my guns. That's the typo. I predicted the dollar would climb relative to other currencies and enter a new range, waiting for the next crisis to move higher again. And you guys have probably seen this. This is the stair step of the dollar. Great financial crisis here. Of course, QE kicking in. Everyone thinks, oh, the dollar is going to die. And boom, all of a sudden it goes up to a new range, a higher range versus, DXY versus other major currencies. Then we have COVID here. Everyone's talking about the dollar dying. But nope, it didn't collapse. The doomers were wrong, and we went up to a higher range. We'll see if this keeps consolidating or if we have another dollar wrecking ball. But I don't know. We'll see what Trump does. His economic plan came out today, and I'll have to take a deeper dive into that. I saw the major points of it, but that could affect the dollar depending on what they want to do with it. So anyway, that's my dollar calls. They have been correct. The dollar doomers have been wrong. As COVID and the associated stimulus hit, most people were calling for a dollar collapse. As the much anticipated inflation finally started to pick up after a 15-year wait, because people were talking about this inflation from QE, and it never materialized. It wasn't until we shut down the global economy because of COVID that we finally started seeing some quote unquote inflation. Many analysts in the Bitcoin space expected very high inflation to be the new normal, and some were calling for hyperinflation, and Bitcoin would be globally adopted as an inflation hedge. So this is the thing. They are inflationistas pushing an inflation hedge. Throughout this whole period, I was saying high CPI was going to be transitory, that the structure of the global economy would not allow for high CPI to continue for very long. You have to have a low time preference to see it like I do. So, how long is transitory? Is it 1 year of higher inflation? Is it 2 years of higher inflation, 3 years? Well, if you have a low enough time preference, it could be 3-4 years, 5 years even, but it's temporary because of the structure of the global financial system. And let me bring up another chart hold on, let me show that chart first. So this is a year-over-year chart. You can see their 2% target. If you have low time preference, you see this as transitory, up and then down. That's it. And it's falling further now. We're coming up to the next couple months. We're probably going to be down here just above the 2% inflation target. And by the end of the year, we'll probably be at the 2% target year over year. But speaking of transitory, I'm going to do all items from Fred. CPI, yep, that's it. Share this tab. I'm going to edit this graph and make it month over month. And zoom in on this. Okay, so transitory. Look here. This is post GFC normal. All right, chugging along over here. We have the COVID crash. Then we had a period of transitory higher inflation. And it wasn't really, really bad until we get into like October of 2021 through June of 2022. So what is that? About this 9-month period was very high. And then bam, hit a brick wall down to zero in July of 2022. Then the high CPI period was over at that point. The high CPI period was over. This is the transitory section right in here. And mainly this 9 months, if you want to count this, whittle it down to even further. That was transitory. Boom. Now we're back to post GFC normal, and we're probably going lower here again. So, all right. That was that. Let me go back to this. And before I go on, I'm going to check comments, actually. I'm not live streaming on Rumble today, guys, because I could not get the link to come up. They have some issue. Live streaming on Twitter, Telegram, and YouTube. Comment over on YouTube, and I will get to your comments. Dex Invictus back with us. Oh, hey, Tomek, longtime listener, first time live. Well, welcome. I haven't been posting these to the podcast feed, but I'm going to try to be doing that now, at least 1 or 2 a week to get that back going because of this whole Bitcoin Magazine stuff and consolidating all my content just onto Bitcoin and markets again. Get that podcast going. Everything pumping, net worth going crazy. Um, Tomac, I don't have securities, just alpha, real estate. Okay, yeah, you guys are talking about maybe you're talking about everything pumping, but the Bitcoin equity alts or the alts, the new alts are no longer the altcoins. The new alts are MSTR, the ETFs, the miners. Okay, those are the new alts, and I recommend, as Bitcoin progresses, maybe after this cycle, this is going to be more important. But I this is not financial advice, but I think it is logical that Bitcoin cannot continue to go up, 10x on each cycle. Eventually, when it gets to a million, it's going to hang out there for a long time. And yes, it will continue to rise most likely year over year for a prolonged period of time, but it's not going to have these huge cycles that we have today. Just think about this, like the upside right now to Bitcoin is what, like 100x. That's the potential upside. But once we already go 10x, like the potential upside is only 10x now, right? So after this cycle, it's going to uh, be logical to start diversifying into other plays. Maybe not even MicroStrategy, but into miners or into other companies like Block, that they have. They're doing the ASICs now. They're doing all sorts of stuff over there. And so Bitcoin related companies are going to be a good diversification in the future once we gobble up some of these remaining addressable market cap size. Tomac, you say Trump and RFK are on the biggest Bitcoin stage in a couple of weeks. Yep, it's huge. It's huge. We're going to go over Mark Cuban's post today. He talks about the tech bros, Silicon Valley and Trump and what he sees there. I'm not going to the conference this year. So last year, it was fun to be there last year with RFK and Vivek and live react. I was doing that on Telegram, live reacting to them. Maybe I'll watch their feed here on the live stream and react to the live feed or something like that. That might be fun to do. Put down in the comments, guys, if you're watching this later too, put down in the comments what you would like me to do for that. It might be fun. Trump is the most known person in the world. All eyes on him. Yeah, I saw a video of some kids from Uganda, and they were doing a skit reenacting the assassination attempt, and Trump standing up and saying, "Fight, fight!" Right? Like they were reenacting this in Uganda. And it's all over the world already. We're connected world. DJ Vance pick was interesting. Yeah, I don't know. I think he's a tech bro pick, from what I understand. He has history with hedge funds, running a hedge fund, or at least being part of a hedge fund, and a VC fund as well. And so, yeah, he has some interesting background. He's kind of a Peter Thiel type pick. And Peter Thiel is an interesting and divisive character himself, right? Some people love him. Some people hate him and his company, the Palantir. But DJ Vance is a big time Bitcoiner. His last financial, you guys probably know, his last financial declaration or whatever he has to do for Congress had on there Bitcoin, not Ethereum, not NFTs, not any of this garbage. Bitcoin. It said BTC. So he is a Bitcoin bro for sure. So he was the most friendly Bitcoin pick, I think. Vivek was slightly less, but I would have been happy with Vivek. I don't see. I think he kind of stiff armed it. He didn't really want it. He was quoted during, like right before he dropped out. He was in an interview, and they asked him if he would want to be vice president. He said no. Of course, he also said no. I want to be president. So I don't know. We'll see. I hope Vivek gets some major role in the government. I hope RFK gets a major role in the government. I would like to see him maybe as head of the CDC or something, clean up those agencies. Let's see. Tech bros have made a big swing to Trump. Yes, they have, and we'll go over that. The California vote won't look much different, but it's the money. Okay, the money is flowing. It's all about money. And if the money is not going to the Democrat Party, it's going to Trump's super PAC. That is huge. That's also huge for down ballot as well. If you have money to put out all these ads and the Dems don't, then down ballot's going to get a lot of votes too around the country. But California specifically, I don't think it'll make any big difference at all. They're screwed. I saw SpaceX is leaving. Was that SpaceX or a subsidiary of SpaceX is leaving to go to California because of some of these new taxes or new laws they passed over there. So yeah, they're losing everything, and it's going to have a swift shift, or they'll run it into the ground. But guys, we need to keep it in context though. So California is, I believe it's the 4th largest economy now in the world. If you just take it by itself, it's the 4th largest economy in the world. It just surpassed Germany, I think, if I'm not mistaken. So California is huge. It's still got a long way to fall. Surprisingly. But right now, it's one direction. It's not going to revitalize and start booming over there. It's just going to continue to deteriorate. And as people leave, there was something like 1 million people net left California over the last couple of years and moving to Texas or Florida. So Texas and Florida will get more congressional seats, and California will lose their power that they have. And it will be less of a gem in the future, but at least politically. JD's stance on COVID was wild, but people change their mind, hopefully. Well, yeah, he had some crazy stuff on Trump too. I don't judge him by that, because he also has recently become a Catholic, and there is big changes in his life. I think he had a couple kids, and yeah, people change for sure. He has walked everything back, said he was wrong, that he can change and people can change your opinions. So, I don't hold that necessarily against him. And it's better. He's a better pick than like Nikki Haley. Okay. We can't let the, perfect get in the way of good. That's the saying I'm looking for. We can't let perfect get in the way of good. JD Vance is a very good pick. He's a populist to his core. And by picking JD, Trump is kind of showing which way he wants the Republican Party to go in the future. And it's a populist, protectionist route. That is the route that he's picking. Yeah, so we'll see how that goes. X leaving for Austin too. X is as well. I know Tesla left, and X, I guess I thought they'd stay in San Francisco, but yeah, bad news for California. Okay, let's continue on with this piece here. Thanks for coming, guys. Like, comment, subscribe, share. Okay, so we talked about CPI, we talked about transitory. I've also predicted the route for global adoption for Bitcoin is through the backing of currencies, mainly the US dollar. And I was saying this before Michael Saylor was saying this, probably a couple of years, 3 years before Michael Saylor was saying this, before Michael Saylor even came on the scene at all. I was saying that the dollar will be backed by Bitcoin. The dollar has changed multiple times, and it's not that far stretch of the imagination to think it will change again. So I received a lot of pushback from people who said the dollar was going to die on my argument that the US dollar can change and be backed by Bitcoin. Bitcoiners weren't ready for that back in 2020, but it's not so far-fetched now. In fact, it's the mainstream belief in Trump's Bitcoin endorsement. His new vice presidential candidate, J.D. Vance, owning Bitcoin, and many others openly calling for U.S. Bitcoin reserves. So this now has become the mainstream belief. And this was my call from way back. I mean, I wasn't the first to say this. I wasn't even, the only person during this time probably saying this, but I was right about this. And all these people talking about dollar death were wrong. All these people showing the chart of 75 years, each world reserve currency lasts for 75 years. This is total garbage. Okay, it's total garbage. My overarching macro thesis posits that the world is at the end of a 50 to 75 year long credit bubble. During this period, unanchored elasticity starting in 1971, going off the gold standard. And elasticity talks about the how much the supply can grow. So we had unanchored elasticity starting in 1971 that allowed credit and the global economy to expand rapidly, pushing globalization, massive gains in the global standard of living, and population growth. That's success and population growth because they were able to lower infant mortality in most of the world, and that just led to a boom in population everywhere. That success was financed with credit-based money. People don't want to admit that, but that is the case. However, we are now approaching the end of that credit experiment. Across the world, economies are running into declining marginal revenue product of debt, or in other words, diminishing marginal returns on debt, meaning the debt burden is exceeding any economic growth the debt produces. So yeah, you can take out more debt, but for every dollar of debt, you're only getting 50 cents, or actually 47 cents of growth out of it. So the burden exceeds the growth that you're getting, and it will decline further with the next recession. So here is the chart of GDP per debt securities in the US at least. And you can see down here, I think China's worse. I think China's down to 0.3. But here I just put this, I linked to the GDP, but then I put the formula right here if you guys want to recreate this chart. Additionally, global trust in institutions and international law that underlies this global credit system are failing as populism and nationalism are on the rise. Our global economic environment is changing. Environment. This is an evolutionary type theory, all right? And the environment is changing. The habitat is changing. The climate is changing, but not in climate change way. But the environment that the global economy finds itself in is changing. And the credit-based dollar is becoming maladapted. It was really good when the environment was different. Post-World War II, 1960s, 70s, 80s, 90s. It was very well adapted for that period. Now it is maladapted for this period of declining trust in institutions and international law, and populism and nationalism rising. The global economic system is, or the credit dollar is no longer well adapted. It is now maladapted. We will naturally return to a commodity-backed money because it will function better in this new environment. So it's an evolutionary thing. We don't even have to evangelize for it. We don't even have to do anything. I mean, the environment has changed. The properties that Bitcoin has are better suited, and it will just be adopted. I don't know how else to say it. Bitcoin is the optimally adapted new money for this, and the world will naturally, almost subconsciously, choose it. Okay, that was the first section, kind of background on my stuff. Hopefully, readers of BM Pro will jump over to Bitcoin and markets.com. So which way to Bitcoin adoption? Even Larry Fink's base case for the economy is a looming recession. In an MSNBC interview yesterday, and we actually watched this, I think, on Monday, or I talked about it. Several key strengths of Bitcoin that align. He highlighted several key strengths of Bitcoin that align with my theory. His primary point, the first point that he brings up, The very first point, after saying he was wrong and he learned and he studied, his very first point was that Bitcoin is an uncorrelated asset to investment in times when you're scared. So, what are times when you're scared? Those are recession times, right? I've shown in prior posts that recession odds are rising rapidly as unemployment ticks higher and CPI cools. Yet a deflationary recession likely only helps Bitcoin. And that is what Larry Fink was saying. He was saying that in not so many words. I mean, obviously he's super intelligent dude, but he's trying to make it palatable to the boomers out there, the average investment boomer. And so by saying it's an uncorrelated asset in times when you're scared, that is really good speak for just saying that recession is coming and Bitcoin is a safe haven in recession, and it will be uncorrelated to other assets. Okay, let's continue down here. The rest of Bitcoin's bull market is likely going to coincide with that recession. So we're only halfway through the bull market. If recession starts, say, in Q3 or Q4 of this year, then it will coincide with the second half of the Bitcoin bull market, which must lead many analysts basing their views on Bitcoin being primarily an inflation hedge in these times to conclude that the Bitcoin bull market is coming to an end early. So if you're an inflationista and we're going into deflationary recession, you have to conclude the Bitcoin bull market is coming to an end early, that it's different this time, that Bitcoin cannot succeed in a deflationary environment. But that is not the case. However, there are no signs that Bitcoin's bull market is different this time, even if we go into recession. So these inflationistas are going to have to come back into the fold and say, Bitcoin can survive in deflationary times. It can thrive in deflationary times. Actually, Bitcoin, the best thing for Bitcoin would be deflationary period, because Bitcoin is a hedge against these specific risks in a credit-based system where your counterparty, you have collateral risk. Your counterparty is that you depend on, because credit is between two parties, right? Your counterparty in the credit transaction, you can't trust them. That asset that you're sharing between you probably will go bidless. And we talked about how in the financial crisis times, like back in the great financial crisis and even in the repo rumble of 2019, treasury bills did not have a bid. That means you could not use you could not trade your treasury bill in through a repo and get dollars. You couldn't sell it. It was illiquid, instantly illiquid. And in periods like that, that's due to counterparty risk. Now, Bitcoin and gold do not have counterparty risk. If you either own it or you don't, right? I mean, there could be some people that own it in allocated accounts, and that has some counterparty risk or some custodial risk. But Bitcoin and gold, these commodity monies do not have the same counterparty risk. So these inflationistas are going to have to come around to my view if we're going into this recessionary period. How else are they going to explain a Bitcoin bull market? They can't. However, I read that any negative impacts from deflation on the price of Bitcoin, so like deflation versus inflation, the dollar getting stronger relatively, or the money supply going down, should actually have a negative impact on the Bitcoin price. But any negative impact from the deflation will be overwhelmed by the advantages of holding Bitcoin as a hedge against the deterioration in the credit dollar system. All right, next Bitcoin bull leg is starting. Let's turn our attention to the current Bitcoin price charts to see if there is a negative impact from disinflation, or is the safe haven status outweighing these concerns. First up is the daily with important moving averages. I've been pointing this out for this location for a while, blah, blah, blah. And we are getting that resistance today. Once we break through, price could rapidly move to an all-time high. Let's take a look at a live chart here. And let's bring in these moving averages. Bring in the 200, 128, 100, and 20, and the 20 week. Okay. So, wow, look at that. Look at that. Look at this daily candle. Trying to break out above the 20 week and the 128 day. Finding support on the 50 day right here. Yesterday's candle found resistance on the 128 day. Very interesting grouping of candles here. But this is kind of what I was talking about, that we're going to run into some resistance. It's going to go like a little bit sideways, and then we'll probably break out to a new all-time high. And I mean, there is a chance we test down and then go back up, but I don't think that's what's going to happen. So very interesting grouping of these moving averages, resistance, and all that. All right, so let's go back to this. That's just what I'm showing here. Oh, and this green is that is the bull div. And if let's take these MAs off. I mean, it's just a standalone bull div. Look at that. It's beautiful. Marking the bottom, the low close here. Bam, up from there. That was, oh, I'm not showing that. So look at that. Beautiful. Just right on the bottom, the low close, and going up from there. That was a perfectly timed bull div. All right, back to the post here. This also happens to be the short-term holder realized price, which might cause some temporary sell pressure as newcomers who were underwater sell as they break even. But I don't think that's going to be very many. But you can see touching the bottom of this short-term holder realized price. You know, if you bought here, then it dropped 15% on you, and you're like, oh crap. And then you break even, and then you're like, okay, I'm going to sell. So there could be some sell pressure from this, but I'm not expecting very much at all. Just thought it was interesting. The 3-month heat map shows the epic liquidity that is going to attract the price up to 73,000 and a new all-time high. On Binance alone, there is still over 12 billion in short liquidations that will trigger starting at 72,000. So yeah, this zone up here is just like a magnet pulling up the price. So we'll see how quickly it can get up there. I mean, it could move very fast once we get through this zone. Several indicators are also showing that this as the setup we want for a very bullish move. The Puel multiple examines market cycles from a supply side perspective, specifically miner revenue. It's like the current day's miner revenue divided by the 365-day average miner revenue or something like that. I've circled the typical halving effect where the Puel multiple gets slashed. So we'll look at that. This same general idea applies to all of the cycle metrics you can find on Look Into Bitcoin and now Bitcoin Magazine Pro. Disinflation and a looming recession has not impacted the Bitcoin cycle at all. So you can see this is the bull market, 2015 through 2017. And halfway through the bull market, halving, slashed right down to this zone. Again, right here, this is a little bit different, the way that this worked out. Then we had COVID, and then we had the halving right after COVID crash, and it was going up, and then it dropped back down to the same general area. And now we have something very, very similar actually to 2016, 2017 with the halving slash here. And then hopefully we'll just continue to track higher like we did back here in 2017. So that's the Puel multiple, and all of the other kind of indicators that you can find over there on Bitcoin Magazine Pro. They are all showing very similar things. They are not showing any real influence from this disinflation that we've been experiencing or a looming recession, because it's actually good for Bitcoin. Conclusion. My macro thesis has consistently anticipated the evolving dynamics of the global financial system and Bitcoin's role in it. The convergence of rising recession odds, the diminishing returns on debt, and the loss of trust in traditional financial institutions underscores and this isn't like traditional financial, it's actually traditional like international institutions, underscores the need for a robust commodity-backed monetary system. Bitcoin, with its unique properties, is optimally adapted to meet this need. As we've explored with influential voices, blah, blah, blah. Okay, so that's it. That is now premium content over on bitcoinandmarkets.com. Let's jump into the last story that I kind of had here, and this is the Mark Cuban tweet. I'll zoom in to make it a little bit easier to see. And he has bent the knee. He's bent the knee. He's realizing that Bitcoin aligns incentives, and you can't fight it, so you might as well join it. Just like I was talking about Bitcoin being this evolutionary thing, it being optimally adapted to this new macroeconomic environment and geopolitical environment that we find ourselves in, it's going to happen. It's just a natural evolution of the marketplace and what we use as money. And Mark Cuban is starting to realize that, but he's kind of taking a different tact here. So part one, here's a, let me see. Okay. Here's a contrary opinion on the emergence of Silicon Valley support for former President Trump, which, like all my opinions on here, probably won't be popular. It's a Bitcoin play. Not because the former president is a far stronger proponent of crypto, Bitcoin. So it's a Bitcoin play. That's what he says right here. But then he says crypto. It has nothing to do with anything other than Bitcoin, guys. God damn it. Why can't people just stop using the term crypto? It's so stupid. It just makes you sound dumb, too. Like crypto. Far stronger proponent of crypto. Nobody is a proponent of crypto besides scammers or people that don't understand what's going on. And they think that Ethereum, they think that Solana, they think that Cardano, all these things are the same as Bitcoin. Idiots. Not because the former president is a far stronger proponent of crypto. That's nice. But doesn't really impact the price of crypto. Oh, God damn. I don't know if I can read this out loud. It makes it easier to operate a Bitcoin business because of the inevitable and required changes at the SEC. Okay, well, to me, when I read this, I just get the idea that they think that somebody's in charge of this, and nobody's in charge. Okay, it's going to happen. It's a natural evolutionary process. You can't stop it. They tried to stop it, and they can't. Europe tried to stop it, and they can't. China tried to stop it, and they can't. Now they're talking about China actually readopting Bitcoin. Nobody is in charge of this revolution or evolution. No one's in charge of it. And people just can't wrap their mind around this. I mean, Mark Cuban, obviously very smart, successful guy, but he has some socialist tendencies. He's obviously, right here, you can see that it's a central planning tendency. What will drive the price of Bitcoin is lower tax rates and tariffs. What? Which, with history, if history is any guide, and it's not always, will be inflationary. Okay, inflationary. I like that he used airy because it's not actually inflation. Prices aren't inflation. This is actually extremely deflationary, to be honest with you. Because, yeah, tariffs will cause the prices on things to go up. Yeah, that's true. But that has, first off, it has nothing to do with the money supply. Tariffs have nothing to do with the money supply. The effect of tariffs on prices has nothing to do with the money supply. But what will it do to the money supply? The money supply is based off credit. What will tariffs do to credit creation and business activity? It's going to make it decrease. So we're going to have lower amounts of credit creation, which is a deflation. That's actually deflation. So this is not, it's going to have a cause of prices to go up, but it's going to be from a deflationary effect. All right. Combine that with global uncertainty as to the geopolitical role of the USA and the impact of the US dollar as a reserve currency, and you can't align the stars any better for a BTC price acceleration. Global uncertainties, yes. I mean, I think this is saying what I was saying back there. Okay, let's go on to part 2. How high can the price go? Way higher than you think. Remember, the market for BTC is global, and the supply has a final limit of 21 million BTC with unlimited fractionalization. I mean, right now there's a limit, right? 100 million sats per BTC. But in the future, I guess they can. I think that'd be a hard fork. Guys, you can correct me in the comments if I'm wrong. But I think to add more decimal places, it would be a hard fork, because the way that the code treats Bitcoin is as a sat is a whole number. It actually doesn't use decimals. It uses just sats, right? And so one Bitcoin looks like 100 million sats to the code. So to add decimal places, I think that would be hard fork, but I could be wrong about that. Keep that in mind as you consider what happens if, because of geopolitical uncertainty and the decline of the dollar as the reserve currency, Bitcoin becomes a safe haven globally. Okay, so the dollar is not going to decline as a global reserve currency. This is wrong. The dollar is going to be backed by Bitcoin, and it's going to be maintain its world reserve currency status. So actually, that's one thing that I don't like about this talk of global reserve currency, because we're talking about money here. Bitcoin is not a currency. Bitcoin is a money. So if you go back in time and you look at what was the global reserve money, the global reserve money was gold, and then it was silver. And you have periods where it's going to be, a silver dollar. You go to the Spanish and you go to the Dutch with a silver coin, and that was the standard. Their currency was the standard, but the money standard was silver. And then you have gold standard coming in with the British and then the Americans. And then that was a gold standard. So the money was gold, and the currencies floated on top of that. Who cares what currency is the global reserve currency? You want to know what the global reserve money is. And Bitcoin is going to be the global reserve money that the currencies are going to be based off of. All right. The dollar will be based off of Bitcoin. All right. Which means that BTC could be what countries and all of us look to buy as a means to protect our savings. Crazy. It already happens in countries facing hyperinflation. And if things really go further than we can imagine today, and I'm not saying they will, just that this has a possibility somewhere above zero, then BTC becomes exactly what the maxis envision, a global currency. No, it's a global money, but you're getting there, Mark. You're getting there. Yeah, Pierre says maxis were right all along. They were. What was my reaction to this? Let me bring up my tweet on this. Where is it? Cuban says the tech bros support Trump because they think they can use his policies to run a speculative attack on the dollar, forcing Bitcoin higher. I say that's unlikely. I don't think that's the reason they're backing Trump, but it's a win-win anyway. Bitcoin aligns incentives. All right, that's it. Let me go back to the website. I'm going to take a look at the comments, see if there's anybody talking up down here. Hard to catch me live. Oh, no chat. Well, join the Telegram, Tomac. If you're not on the Telegram, check out the Telegram. I do live stream there as well. So I'm live streaming on Telegram, YouTube, and Twitter right now, and usually Rumble. Maybe you don't have those problems with Rumble. And if you're subscribed, you can turn on the bell, and then I'll tell you when I go live. Usually I've been doing my live streams around 3 or 4 in the afternoon Eastern time. Now I might dabble with some earlier ones, see if there's any different response. Is China in trouble? Why would Russia go with their currency when they are known for money printing? I mean, China is in deep, deep trouble, man. It's in deep trouble. Their demographics are absolutely atrocious. They are the largest credit bubble in the world. They're designed for a period of globalization, and we're going to deglobalization. Their whole economic model is trash. They became too far indebted before they became rich. And so they're just screwed. I really don't think China has a prayer. I don't go as far as Peter Zion and say China will not exist. China will exist. I think it will break apart. Like, say 50 years down the road, China might be broken apart again. Tibet might be free. You know, they might be like the Eastern China being a state, and it wouldn't be the CCP. Maybe it would be Taiwan actually taking over, at least ideologically, taking over Eastern China. So, the Chinese government and the Chinese borders and the Chinese economy right now are done. And things are going to change drastically, therefore. Think concern about the $35 trillion hole, LOL. I was not expecting the recession Bitcoin bid, but it looks like it is coming. Yep, it is. Dex says, great stream. Thank you. Thanks, broski. All right, guys. Let me check out Telegram and see what they're saying over there, if there's anybody making comments. Live reactions are great. Have you ever tried to get in touch with Gammon? I feel like he has a bunch of followers and his sub is expensive as heck. I think it's $100 or $1,200 last time I checked. Yeah, he has that, whatever it's called. They have some big community there with Lynn Alden and himself. I think Jeff Schneider's part of it, and that Macintosh guy. So yeah, they have a community with several content producers. And so, yeah, it would be very expensive. I mean, they have to divvy that out between 4 people. But yeah, I've reached out to him in the past. I think, did I reach out to him and get him to come on FedWatch? I think I might have, back when CK was still there and we were doing guests. So that's like kind of at the beginning of my FedWatch time. We only did like 10 or 12 guests total. But I think I reached out to him back at that time. He was just coming on the scene with his whiteboard stuff. But I could be mistaken with that. Yeah, I would love to discuss with him. Maybe I'll call him, or maybe I'll contact him and see if he can just come onto this podcast and chat. But he has made a lot of progress, man. He reminds me right now. So George Gammon in 2024 reminds me of Ansel Lindner in 2018. Like the type of complete inversion that you do in your head once things click. So that's great. I'm glad to see that. All right. Well, that is all I have for today, guys. Thanks for joining me. Check out bitcoinandmarkets.com. Like, comment, subscribe. If you're watching this later, make sure you're subscribed. Turn the notification bell on. Check out the Twitter at Ansel Lindner. I'm live streaming over there too. So guys watching on Twitter, jump over to YouTube and Rumble. The links will be in my pinned tweet. Subscribe, comment. Thank you guys for joining me, and I'll see you on the next one. Bye.